we would be squarely back into bull market territory. Those are the levels that I would look at. I wouldn't be surprised if you just continued up to a very significant level, and you can definitely just place a limit over there. Hello everybody, just wanted to make a quick video to explain to you what to expect for Bitcoin heading into this month. And FOMC is going to be in a few hours, followed by a lot of news events coming into later on this week, such as non-farm payroll. We have a lunar eclipse happening later this week, and I'm going to explain the significance of all of those and what to expect from the markets, because I believe this is quite a big week. So let's start off with looking at the monthly chart, because we always start our analysis off on the higher time frame. Monthly chart wise, some people could say that this looks like a bearish candle. Last month's closing kind of looked, weak, and there is merit to that, but it's not what you think. Firstly, I want you to keep your eyes on this blue box right here. This is a monthly fair value gap level, and you can see that on the monthly chart, at least, it hasn't hit any of the liquidity levels. For example, there's no swing high here, there's no fair value gap here. It hasn't filled in anything yet. And so for now, you expect the price to keep going up, and any retracements into retracement levels are going to be where you want to buy. And in this case, it's going to be right here, because there is also another fair value gap, right? At the low of this wick, at the high of this wick, there is a gap without any price action. That is a fair value gap. I'm going to explain how significant one of these levels are later, and I'm going to back it up with multiple confluences. But for now, let's pay attention to the target, right? The target hasn't been hit yet. In fact, if you do draw a fib from your monthly high to your monthly low, you can see that this doesn't even come close to getting into a premium. A premium is basically anything that is above the 0.5. And when the market has been trading in discount for too long, the algorithms like to bring it back into a premium. In this case, it's going to be either the 0.618 level or the 0.705 level. Those are your golden pocket. And you can see that there just so happens to also be a fair value gap at that golden pocket level. Is that a coincidence? Definitely not. And so one could theorize that Bitcoin shouldn't even dump until it hits here. But of course, that is a lot to ask for, because if Bitcoin were to hit this price, which is at 50K, we would be squarely back into bull market territory. Or at least that's what everyone's going to think, until they realize that, well, a few people are going to realize that this is very key resistance, and it's going to go for a hard retrace. But either way, that is very far off into the future. Let's focus on what is in the near future. And at the moment, the level I'm looking for is $34,800, or rather $35,000. I don't believe that Bitcoin is going to go down until that level is hit, just purely based off of the monthly chart. And of course, market conditions could change at any time. And if it does, then we just simply have to adapt accordingly. And when that happens, I'll definitely be back to make another video. But for now, that is the level that you want to look at. And the way I derived that level was, if you just go back to the monthly fair value gap, go from the high to the low, draw a fib, and that is your 0.5. This is known as a mean threshold. Now, whenever you are trading anything related to fair value gaps or order blocks or any of the institutional trading concepts, you always want to use mean threshold. It is a very high probability level. And just to illustrate to you the power of a mean threshold, this is a mean threshold right here. Look at where the price comes to, directly at the mean threshold of the fair value gap. Heck, even if you look at this rejection block over here, right? Check it out, right? On this rejection block, you have 0.5, which price finds two bottoms at, which would actually have given you quite some significant gains. Of course, you also have another example over here where price gets rejected at the mean threshold. Again, just to prove that this is not a coincidence, the market makers have designed the market in this way. So knowing this knowledge, you should definitely take advantage of it. And I could go on and on, but let's get back to the topic. So mean threshold, very key. So now that we've identified the monthly level, let's look at where we can get in on a retracement. And previously I said this, if we were to get back to $26,200, it would be a very significant level, and you can definitely just place a limit over there. Firstly, it is the monthly fair value gap, and that is the mean threshold right here. That's the mean threshold. But if we also turn on the 3-month VWAP bands, this is a VWAP band that I really like to use to just identify key levels. You can see that the previous month's VWAP high lines up with $26,200 as well. I could also go on and on, but if you come back to the daily chart, of course, you have that confluence as well. This is another fair value gap, and price just adds up. So those are the levels that I would look at for a retracement, and honestly, I think that's very likely to happen. And when we look at the monthly chart and when we look at the monthly candle, it is very similar to how we would predict a daily candle sort of movement. For example, yesterday was Tuesday, and based off the techniques that I teach, Tuesdays tend to reverse Monday's move. Monday was down, and so you expect Tuesday during the New York session, it's going to be an up up movement. So knowing that the daily candle was likely to close higher than the open, right? The daily candle opened here, went lower, but then eventually it went higher, but then it closed, still higher. And that's sort of how the monthly candle works as well. Like, even though the monthly candle right now looks pretty bearish, it could end up just being one of these types of candles, right? The opening was here. So that's how the candle is going to look like. And then it's probably going to close higher is what I am predicting will happen. In fact, the body might not even be that big as well. So probably something like this, which is very common on a monthly candle because it's just how much price movement happens in a single month, as you can see from this candle before. So what I'm expecting is, a monthly closing candle, kind of like that. And same theory applies for the daily chart. And just to break down that trade that I took, it's like I got in half an hour, I got 10 Rs, and it was very predictable. And all you have to know is that Tuesdays tend to reverse Monday's move. And the time that you want to look specifically for that to happen is at 9:45 a.m. New York. So let me just go back to yesterday before the move. So at around the time of 9:45 a.m. to about 10:15 a.m. is when you want to look for this setup to happen. And it's only on Tuesdays in particular. Monday's move showed that it was going down. That Monday's move tends to be the fake move. Tuesday's move tends to reverse Monday's move. And that happens at the New York kill zone. And in specifically 9:45 a.m. to 10:15, you want to look for a false liquidity sweep. So given that my bias was higher, given that I know that Tuesday has a very high probability of reversing Monday's move and going up, I knew that at around 9:30 a.m. is when I started looking at the markets and you got this first sweep. Now, I already entered around there. But the key you want to look for is just a liquidity sweep. Now, the move that happens at 9:45 is always going to be the fake move. What happens then is you simply reverse that move and you continue until New York 5 p.m. As you can see, price is trending very hard until New York 5 p.m. Why does it stop at 5 p.m. and it just starts ranging and, doing a lot of shenanigans? It's because New York 5 p.m. is when the markets close and the market makers go home. They stop working. Now, let me just bring you back to last week because I got a exact similar setup as well. So last week happened 9:45. It just took a little bit longer for price to move. Liquidity sweep, right? Monday move showed lower, right? This was Monday. So I knew that Tuesday is going to fade Monday. And so that's the liquidity that you want. 9:45 to 10:15 is when you want to look for this setup. 10 a.m. you start sweeping. At this point, just look for signs to go long. You go long and you just ride the wave until New York 5 p.m. Now the whole day keeps trending until price stops moving at 5 p.m. Right there, 5:15 p.m. market starts ranging. And this is very, very predictable price action. And once you train your eyes to see this, it is going to be a very big money maker for you. Now, if you want to learn more about these types of concepts that can help you make money in like literally half an hour a day, I am actually about to open up spots for the AOC Mastermind. Now, the last intake I did for the AOC Mastermind happened all the way back in November of 2022. And since then, a lot of the students have already gotten funded or are getting funded for amounts of $100K or even $200K. So essentially, just by going through the program, they have in a few short months learned how to be profitable traders and are now setting themselves up for a lifetime of trading success by becoming a funded trader and making a consistent six-figure income every month. And all of this in just a few short months. If you want to get involved with this, I'm only going to be opening up about 5 spots for the next intake because I want to keep it tight-knit and I want to make sure that I have enough attention to dedicate to all of you. I highly recommend that you just go to the link in the description box below. There will be a link for you to book a call and we'll speak more then to see if we are a good fit. And if we are, let's get you set up for a lifetime of trading success. But anyways, back to the video. Let's take a look on the daily chart for Bitcoin at the moment. It seems to be running into, I don't want to call it resistance, but this is an area where you would ideally look to sell. And it lines up with our theory of price going down first before going up. And for now, at the very least, until Bitcoin break like 29,450 with a candle body close above, I just wouldn't buy this at all. I know that FOMC is going to come up, but here's the situation on price action. Until Bitcoin goes above like 29,200 or even 29,450 with a candle body close on the daily above this level, then I wouldn't even be looking to buy Bitcoin at these levels. What I'm thinking is that it's going to go down. It lines up with our theory on the monthly chart about price going down first before going up. That's how the monthly candle is going to look like. And the reason for this is because, well, simply put, you have broken structure to the downside here with this candle body close. Now you're retracing into a bearish order block, which is an institutional area where, the big players look to sell. And so there's just a bunch of liquidity that we've already identified in the 26,000 level. And so it just makes sense. You go down first and then you go up. But in the event that you do break above here with a candle body close, then that that is a confirmed trend shift to the upside. And that just gives you the confirmation you need to start buying again. So what I would do is, instead of buying here and risking this thing just going down a lot, I would wait for a candle body close, break a structure, and then I would buy higher, right? Buy high, sell higher. That's like the secret to trading success. Instead of worrying about, oh, this is not a good price for Bitcoin. There's no such thing as good price or bad price. All that matters is what the market is giving you. If the market is telling you that it wants to go up, then you have to stop your bias and just go up alongside the market up to this level. But if the market wants to go down, which is what it seems like it wants to do at the moment, then I would just look to sell until it hits $26,000 or even slightly below. So that's the situation with Bitcoin at the moment. And just to give you a few extra data points to add on to this theory is, well, if you look at the DXY, just the DXY alone, it actually seems like it's going to go just slightly lower, for a few more days before going up. And this is actually lining up with the fact that on the S&P 500, you have swept the liquidity, sell side liquidity over here, down here. And then right now you swept the liquidity up here. Now, all that matters right now is that S&P 500 needs to hold this level, like 4114 points to 40745 points. And you might be wondering why I'm bringing up the S&P 500 and the DXY, and later I'm going to bring up the US 30. And that's because the stock markets are highly correlated with Bitcoin. What tends to happen is that as the S&P 500 is going up, right, Bitcoin tends to follow, because S&P 500, like Bitcoin, is a risk-on asset, meaning that when the DXY is dumping, S&P and Bitcoin tends to do pretty well. In this situation, you have a displacement to the upside with a clear order block over here, bullish order block that price just retested. So ideally, you want to see the S&P continue higher here, which would line up with the theory that Bitcoin's probably going to get a kind of close above and just, continue higher. And you can see that here, I have probably the high time frame target here at 4,300 points, which is not impossible because right now you are forming a lot of liquidity up here. And I wouldn't be surprised if you just continued up to 4,300 or heck, even higher on the S&P. And if that happens, then Bitcoin is just going to follow and hit 35K pretty easily. So that's the situation on the S&P. And you can see the Dow Jones Index giving you a very similar story. You have a bunch of liquidity built up here. A lot of people are going to look at this and be like, oh, that's resistance. But in fact, it's just liquidity and the market makers are eventually going to go grab it. Now, the thing that sets this off for me is that over here, you have sell side liquidity below these candle bodies, which you just took in this move. And then you have displacement to the upside, same situation as the S&P 500. Right now, as long as you hold this level, then it's very likely that you are going to go up. And the eventual target for this is these two highs would be the key levels that you want to watch for, which is at 35,800 and 36,800. And if that happens, then Bitcoin is just obviously going to follow. And it's also a kind of a similar story for gold, although not as convincing as the other three charts, which right now you've just gotten displacement to the upside. So this has become your daily bullish order block. And as long as price holds this blue box here, so if you retrace and then you go up, then gold is just going to continue to make all-time highs. And this lines up with a narrative of when times are uncertain, people tend to put their money into gold, and Bitcoin's sort of being treated as digital gold, and that could be a narrative that pushes Bitcoin higher. But either way, hopefully this video has given you all the information you need to make educated decisions as to how to trade Bitcoin heading into the next few weeks. And just remember, this mastermind does not open very often, and the people who have gone through it only have good things to say about it, and they have gotten massive results. The results that most people wouldn't be able to get in like 1 to 2 years of trading just by yourself. If you want to get set up and learn how to do trading properly and then get funded up to 100 grand or 200 grand while doing so, and that's the time. Click the link below and I'll speak to you soon. Cheers.